Well. Hello, everyone. My name is Ben Rodin, and I am joined by my colleague Ryan Muir.
Hey
We are
guys.
product marketing managers here at Smarty. I deal primarily with our enrichment family of products as well as our fintech vertical. And Ryan, I'll let you introduce yourself as well.
I'm Ryan Muir. I deal mostly with our insurance vertical and our geocoding verticals as well, geocoding products. So a little bit about me. I spent about 8 years in the insurance industry as a licensed agent. I spent a lot of time working with an MGA as well as working in some brokerages and things like that. So a little bit of background in the insurance industry, moved into marketing as well in the insurance industry, selling a little bit of B2C, a lot of small businesses and things like that. So, taking insurance programs from program development through to launch and then growth as well.
Well, thanks all for being here. We're gonna jump straight into our presentation here. If you have questions throughout, please send them in. I'm gonna be kind of keeping my ear to the ground on incoming feedback or questions or comments, and we'll yeah, get started.
Yeah, so Ben and I will be talking to you guys about driving greater ROI with location-based risk modeling. So we'll jump right into it and show a little bit about Smarty and the things that we do. Um, okay, so by the numbers, so we have a little over 7,000.
Just one sec, Ryan. Are you guys able to see Ryan's screen right
No,
now?
okay, let's see. Let me know how that goes.
There we are. Yep.
That's it. Okay. Yeah, so we have a little over 7,000 active global customers. We can process 3 billion addresses all in a day's work kind of thing. That is not a rare occurrence for us to hit that many addresses all at once during one day. We see that kind of fluctuate, of course, but we're able to do it. We do 25,000 addresses per second. However, that's kind of our starting point in a lot of cases, especially with our geocoding. So we're able to process a lot faster than many other providers. We can do up to we've had speeds of 75K even and things like that. So able to do it very quickly. So address intelligence, though, you really need to have a combination of products to help drive address intelligence accurately. So we're going to talk about kind of that product suite, if you will, that Smarty has to offer. The first thing is our rooftop geocoding. That is rooftop accurate. A lot of confusion there sometimes revolves around is it roof type and things like that. We do have additional attributes, but this one is specific to finding, the exact roof of the property, even down to the suite level of data. Global address verification. So again, we will standardize, verify, and return the addresses back to you so that you can have the best address data available. Our autocomplete. Autocomplete, that's that fun little widget every time you try to buy something where you're typing in an address, be it while you're shopping or even on a back end system, and it suggests an address to you. Ours come back verified and standardized so that you're, preventing that bad data from actually entering your system to begin with. Give validation a little less to work on and clean. We do then take that information, take other information, including property attributes, their financial, structural, and locational data. And there's 350 attributes. To me, they look a lot like an underwriting, application. Looks like commercial property app to me, homeowners app to me. That's kind of what I see there. It's a lot of that pre-fill, makes it a lot easier. And it's difficult for insureds to know exactly what their property is made out of, like the different square footage, how far they are from certain things that insurers find valuable. And so just knowing that information from a validated source is really helpful. And then we jump into our 465 plus FEMA risk data points. Those things are, I believe it's 18. Is that right, Ben? 18 hazards that we cover on that one?
That's correct.
18 hazards. And we can look at projected annual loss. And I believe it even for a property and the location, I believe it even returns a dollar amount for some of those things. if I'm not mistaken. So we'll kind of go through those. We'll talk about how they work together as a suite to help insurers have the best data possible. Okay. You're in good company with Smarty. So we like to say when we see customers at shows, if you used Uber to get to this show, you probably use Smarty to get to this show without knowing it. You're also in the company. You're in good company with Cape Analytics, Hippo Insurance, Chase, Esty, Betterview by Nearmap, Carpe Data, LexisNexis, and E-Trade. So we're capable of processing and taking care of large accounts to small accounts. Makes it pretty easy. Another big thing for our insurance customers is we are integrated into Guidewire. We have about 13 accelerators on Guidewire. There are accelerators in both Policy Center and Claim Center, and as well as Insurance Now, and we're looking to expand, what we offer in that space. Right now, we've had over 209 marketplace downloads, almost 30 million lookups that have been used, a lot of purchases and a lot of accelerators in use. And it's nice to have it in your policy admin system with Guidewire. Makes it real easy to connect everything that you need to have for assessing risk, processing claims, and so on. So how does Smarty help insurers? The big thing, again, is access location data for risk modeling. So as you're compiling, location data, it's only as good really as the location that you're able to assign risk models to. So that being said, if you've got what we call a zip9 geocode, for example, where you are down to one side of the block, 5 to 20 houses, that's still a fairly broad area. It could, in rural areas, that could be even bigger. Zip code data, again, that's been a standard for insurance for a long time, but you're only as good as your precision level, which is where we say it's best to find exact rooftop down to the suite level, preferably the secondary address, if you will, and put a pin exactly where that's going to land so that then you can connect that data. So this coordinated data empowers underwriters to connect that data. You're going to want to be able to unmask what's there. So that's pre-fill, claims management, program generation, right? Like what could be your expected annual losses and things for a new program that you're creating or a new market you're looking to enter. And the way to do that, of course, is you need to be able to connect that data and append that data to your insurance information. So you most likely have some vendors that you use that provide you risk models. They may provide you, rating information, things like that. Being able to connect those to an address is key, and the way we do that is with something called SmartyKey. So that is a persistent unique identifier. We'll go into that a little bit more here, but having that key is really what's going to, make it work for insurers to be able to have the most accurate data possible. Inaccurate data leads to really bad risk assessment, and bad risk assessment, poor risk assessment, if you will, is going to end up leading to higher loss ratios. It's going to lead to paying out a lot more in claims. It's going to kind of leave you hanging. You're kind of dry, So in order to overcome that, Harvard Business Review did a study on this, master location data, and close but not quite there. So, and this is specific to insurance and risk management on this part, where you got to start with that hyper-accurate geocode. And then you have to have that persistent unique identifier, and that needs to be assigned per location. Now, when I say location, I don't necessarily mean address. Location is the physical place on Earth that it is, because addresses can change, addresses can shift. We even think of things like strip malls where suites might combine, business units where suites might combine in the future. So we're talking about a physical location. And then on top of that, being able to link that, insurance information, the property information, the risk models to that identifier so that you can blend for a really good risk model. So what is rooftop geocoding and why are you going to need it? Well, again, rooftop geocoding here as we look, you can see over here, we've got these single family homes up on the corner of Pribble and Pribble Road and Ariel Lane. And then you come down here to Concord Square Apartments, and all of a sudden you've got a bunch of units in these different apartments. That paints really the full picture of the property itself, right? Like, yeah, there's a lot of things that go into what's this building made out of and everything else, but also if you're dealing with a single family home versus an apartment, you're going to have a lot different risk between those two. So, how many units are here and how many are going to be impacted in the event of a catastrophe of some sort, right? But slight imperfections, such as not knowing those number of units here and not knowing how many units are there, can lead to the billions of dollars of inaccurately priced insurance policies. And I know to some extent in the insurance world, we've kind of just said, there's that level of unknown acceptable risk and kind of prepared for a rainy day, so to speak, for the insurance industry. And that's where we're trying to say, no, like maybe let's protect you a little bit more. And by using location data as that umbrella a little bit to protect you from that rain, to like cover you a little bit more, you can gain a lot of ground and reduce that unknown amount of data that you're pulling in. So we got to talk about accuracy. In the US especially, we talk about parcel. So parcel meaning the lot that the property is on, kind of a binding box, if you will. And the parcel geocode specifically is going to be right in the center of that parcel. And in many cases, if you're in a big area where or an area where there's a lot of single family homes that are close together, some of the new developments especially, a parcel is probably going to land on the rooftop. However, there are many cases where it's either rural or maybe it's suites again, different things like that, where you want to go down a little bit more. You want to get that rooftop. So you can see here, we're going to give you this rooftop instead of, say, maybe you drop the pin in this little lake that's in this image off to the side here. Like maybe that's the side of the lot, and that's not particularly helpful, knowing that that's where it is versus where the actual structure you're insuring is, right? It helps to know what you're insuring and where it is. So then we drill down to the sub building, and of course that's your suites, rooms, floors, penthouse. There's one that's hangar, and all these different types of secondaries that you have. So you can know exactly what it is. We do provide a competency rating for each geocode, meaning if it's parcel, we'll tell you it's parcel. If it's rooftop, we'll tell you it's rooftop. And we will drill down so that you have the transparency that you need to be able to make the right decision. We don't want to just say, hey, this is rooftop and it's not. We're very transparent and open, and that's one way that Smarty excels in helping insurers have more confidence in their data and match better.
Yeah, one of the things we focused on as we're developing products is the idea of sort of cascades. So we want to solve your problem if we can, but if not, we want to be part of a cascade that helps you solve that problem. So whether that's part of that transparency is to say, hey, we don't have the rooftop for this. This might require additional research. This might require drone photography or satellite imagery or a site visit, just so you know that nothing is falling through the cracks as you're assessing risk on any of the properties that you're responsible for.
And Cascade's actually a really solid point. Like, we're not too proud to admit that, like, we realize in the insurance space, this is your bread and butter, and you've probably got multiple sources like of geocodes. But we do feel that being at the top of our cascade, you're gonna putting Smarty at the top of your cascade rather is gonna help you out by catching the most data the first pass. And then run it through what else you have or what you've been using, because again, we're that 97% accurate to parcel and rooftop, and being able to give you that data. But that's a great point. I love that. So here let's have an example here. Here we have some seafront property, vacation homes, looks like, and we've got a bunch of single pins, right? It looks like we got some some single family homes and things like that. But let's punch in and see what we're really looking at. So as we punch in, we're going to go into this specific unit here. And what we're going to see is that they all have the exact same primary address. That's the 170 Celestial Way. And so again, if you're using just the primary address, that might not be good, because how much different does this risk change for you as you add in apartments 1 through 6, you know, and 5 through just all the way down, right? All these things say 170, but it's really, tens of apartments. There's probably 30, 40 apartments in this one complex. And so being able to see that really paints that picture more clearly for you, as well as being able to help you connect your risk models, right? Again, like in a game of feet and meters, like how might your risk change for something that's further up this hill? If I go back a little bit further up this hill from here to here, right? Is there a chance that these guys might be more at risk to a flood or a storm surge and things like that? And the answer, of course, is yes. So, feet from seashore and being able to tie that to a geocode, like that's probably something that you'd be very interested in. You do notice as well that up over here, there's a couple dots that aren't on buildings. Those are what we would call zip 9s. They're more broad, and if we were to put a binding box on here, it would be much more substantial.
So for me being a non-insurance guy, if you'll go back a slide, Ryan, this really demonstrates the value, let me just see that I'm understanding it. If I am assessing that property using the zip 9, I'm losing all that resolution in terms of, unit 3 is X number of feet closer to a storm surge area. I'm basically saying I'm dropping a pin where that little swimming pool appears to be. That's my only point of reference for the location. The profiles of each of those buildings are so wildly different that that data point becomes essentially useless.
It does. It does become essentially useless, and kind of along those lines too. Like the elevation between these two buildings is going to be potentially different. These are on a little bit of a slope here as well. So yeah, being able to see that like it's closer in feet, it's lower in elevation. Like when the sea comes in, it's going to cause a problem.
Yeah, I guess clear, like if I'm using the zip 9, I at least know generally this is oceanfront property. So
Exactly.
so at a high level, I can understand there's risk there, but as you mentioned, when you're dealing in meters and feet, having that rooftop is completely game changing.
Exactly. And you definitely end up pricing those properties probably a little bit different.
Yeah. Yeah, that's a good point. I mean, from an insurance perspective, but also, yeah, like if you're in real estate tech, like
Yeah.
having that unit information is, I don't know. I guess there's more use cases here than just insurance. So
Yeah. Fintech as well. You brought up real estate, fintech as well. Like looking at these as you got loan applicants and things like that coming through. Like that could be big. And just being able to paint the true picture of what's really there, because otherwise you're kind of flying blind.
I have a question, Ryan, and again, this is very much leaning on your expertise. We talk about, at least in my mind, I picture like the property risk data we provide and the property attribute data. I sort of think of those in silos, but
Yeah.
if you're an underwriter, are those attributes interacting? For example, am I looking at distance to a flood zone along with housing materials, foundation type? Are the physical locational attributes interacting with the risk attributes? Does that make sense?
Yeah. That's a good question, and they should be. That should be the standard and should be what's expected of and what insurers should expect from the risk modeling, to be able to say, hey, this is still reinforced masonry, or this is just plain masonry. Being able to see how many feet are facing the street, being able to see all that information and then take a look at it, roof type and shape.
Yeah.
Take a look
I
at
think,
that from then, hail likelihood. Are we going to get hail damage in
yeah, yeah,
here?
yeah.
And so
Interesting.
combining it and saying, oh man, this is going to be bad. And we look at the still reinforced masonry. then we start talking seismic information, and some of that risk data that you brought up earlier is like, still reinforced masonry is going to do a lot better in the event of a catastrophic earthquake versus something that's just plain masonry.
Yeah.
Local to us, of course, there's been some pretty big renovations up in Salt Lake on some religious buildings and things like that, where they've taken a building that's hundreds of years old and they're refitting it in kind of quite a seismic way, because it was just masonry
Yeah.
to be more safe that way. And so again, knowing those things could be pretty big. I was talking to an engineer who was reading about that as well. He said that's just wild that they're able to lift just this massive building
Yeah.
and reinforce it to be earthquake safe, because in the Wasatch Front where Smarty is, it's a very big. We were always told that about the big one's going to be coming, and that we're sitting right on the fault line. So
Yeah.
we got to be careful.
It is, in your experience, are risk modelers doing this? Like, are they creating these sort of intersectional risk profiles that are using different data sets? I imagine so, but I don't know to what
Yeah,
extent that's common.
yeah. So there's some of it's being used for sure, but I don't know that it's been standardized. It kind of depends on the company you're at and the level of detail you're looking in. I've worked at some places where they were underwriting properties and they were just saying, pull up Street View and kind of see
Yeah, yeah,
what's there,
yeah.
and ask your insured applicant, like, what is this, and make sure you check these boxes. And that's where you get a little bit of heartburn there. You're like, oh man, like I'm really dependent on somebody else who may have no idea but
It's
is
just
in a hurry to
eyeballing
get
it.
insurance. Yeah, they're like, I don't know, I mean, they've got bricks, but
Yeah,
like what's really in there, and
yeah,
so, but that's one thing where it's best not to assume, and that's kind of some big assumptions, and being able
yeah,
to combine the property with the risk model and say, okay, are we really prepared for this risk that may or may not come, or that we are slated to lose X number of dollars annually from. Being able to paint that picture with Smarty's risk data is very helpful.
yeah. Cool. Anyway, didn't
No,
mean to
that's good. That's great.
say.
Um, Addresses. Okay, so this is where we talk about SmartyKey. It's a PUID, persistent unique identifier. So it's a 10-digit key for Smarty, and basically what it is it is assigned to a location. So this is where I say at location, not an address. So for example, this building over here with this little umbrella in the backyard is going to have a different Smarty key than this building over here, and so on. Each one of these buildings in this picture would have a unique Smarty key. The reason being is that addresses have aliases. Addresses change. So we've seen it where two cities claim the same address. We've seen it where the street name changes. We've seen it where there's different secondaries and things like that. Multiple street names referring to the same building. And really, what happens here is that key stays specific. It doesn't change, but it inherently knows what address you mean. So, for example, and we'll go into an example here as well, but so if you have a risk model or risk analysis, risk modeler or insured or someone who puts in an old address, then the Smarty key says, oh, actually you mean this address and it actually does have a claim, or vice versa. They put, say a street name changed recently, and so the insurer puts in the new address, and then you plug that in and you're like, oh, there's no risk data on this. What's going on? Well, the old street name has actually got a lot of risk data on it. And then you can pull it up and say, okay, these two addresses are the same, but that's where SmartyKey is really handy because it inherently knows that those things have changed. So as streets are renamed, you don't run into as many issues with bad data because of that issue. And a leading edge geocoding solution like Smarty is going to provide you that. You've got to have that key. And then you got to blend all your data, because how many points are you getting addresses from? It could be a lot.
I don't know if anyone has attended both, but we just did a session with Eric Rentz from Stripe, and they deal with Stripe's tax product. He's in GIS, and he talked about the importance of being able to sort of limit the processing that they do to sort of like
Yeah.
pre-batch process, sort of preload data set. So each time you're querying against a map or creating a map, you don't have to reprocess. This seems like something that would be really helpful in that context.
Yeah, you'd be able to save, that SmartyKey so that you don't have to reprocess it. We even recommend assigning your stuff to the SmartyKey, of course, so that you don't run into issues with, like, so you can process faster, I guess. That's the way to
So,
say it.
so basically you're saying like you use SmartyKey as a, even though it comes from Smarty, because it's tied to location, you can use it as sort of a vendor or data source agnostic identifier. So you could theoretically say, I'm going to have any, Smarty address enrichment. I can tie it to the Smarty key, but I can also attach anything from any data source to this, pre sort of calculate that. So when I'm, pulling up an address, I don't have to continually hit or re-ping that data source.
Exactly. You don't have to re-hit it and re-ping it. And by using SmartyKey, that enables you to, get the bigger bang for your buck and creating those models quickly. We know a lot of insurers will run models repeatedly, right, throughout the year, and it's millions of addresses. And being able to do that quickly via Smarty and with the SmartyKey is saves valuable time, streamlines the process, takes a lot of the guesswork out as well.
Cool.
Um, yeah, this is kind of what we just talked about a little bit, but we'll go over it. It ties to a location, which is full of addresses. It's numeric or alphanumeric. Why not use the address? Because again, the addresses change, and we're going to go into a showcase of that. Why not use the geocode? Again, sometimes what a lot of the stuff you're going to be pulling in is pulled by an address, which again, having the address and the geocode tied to that SmartyKey is going to be the most accurate way to have things. It's also helpful with privacy issues. So, as we're trying to keep things compliant with, California or whatever, as you're using the California Privacy Act and different privacy laws as they come about, using that SmartyKey makes it a little easier to do that. It anonymizes that data. It's congruence. So it handles the changes, it adapts to changes, and it keeps your data clean. Because you're going to have millions of addresses in your database, and if that's the case, you need to make sure that they're clean, standardized. You don't want to be dealing with bad data. And again, get the full picture and drive your better business outcomes with lowering your loss ratios, having more profitable programs, things like that.
It's funny when you said you could have millions of addresses in your system,
Yeah,
multiply that by the 2 or 3 valid ways anyone could write that address and the
yeah,
infinite ways that people could mistype that address. So just by like standardizing it, you decrease the size of your database and increase the quality of your database.
exactly. And like, I mean, I'm a guy who's got pretty big thumbs. A lot of stuff is done on the phone, right? Like, I can't tell you how many times I hit U or versus I, or like T versus R, and I run into issues with that. And like, I can't be the only one. And personally, I think autocorrect is getting dumber, like as far as typing out stuff. And so, the more errors show up, just through autocorrect and not being careful, right? I think that's something to be aware of.
That's like the alternate origin story of Smarty is someone just looking at their thumbs and being like, it's just too big. How do I make money off of this?
They're too close together, man. It's two thumbs cover the whole keyboard. Like, who knows what I type?
Oh, that's hilarious.
Yeah, and it's fast and it's affordable, to use the PUID. Again, Smarty has 220 million addresses in the United States. So 220 million unique keys, right? Assigned to how many of those addresses have changed. US has been around for couple hundred years, and a lot of these buildings. I went back east to Boston, and there's a lot of old buildings up there, a lot of old buildings back east. Like, how many different addresses have these places had? Um, and then it eliminates those headaches, eliminates the guesswork. You've got your test done. You can revise it. Actuaries will love you for having this. because it makes it easier to create an accurate model and to build programs and to meet the standards that insurers should expect from their address data provider, and then be able to expect from them their brokers, or if they're direct to their insureds, being able to expect it from their insureds as well. So let's take a look. So here's one. This is actually down the street from us. This is an example of using SmartyKey here. So this 77277650 is the SmartyKey for this particular pin right here, the UPS store. Now, this particular road up here that's called Cougar Boulevard was initially named after the local high school that had been around for a long time. Their mascot was a bulldog, and so they called it Bulldog Boulevard. However, the city went through and they, built a new high school and moved it away from the old location, and we ended up with Cougar Boulevard because the local university, Brigham Young University, purchased it, and their mascot is a cougar. So we ended up with Cougar Boulevard. Again, this is where I want to paint the picture that a lot of data is going to be assigned to that Bulldog Boulevard, right? A lot of risk models may be using Bulldog Boulevard. And if what you get coming through is Cougar Boulevard, that's no longer going to be assigned, but we're talking the same physical location. And that's where it's important to have the SmartyKey that understands we're now talking Cougar, but the risk is the same as Bulldog. And that helps you be a little more accurate. And then just to throw another layer of complexity on top of this, we had to add a numerical address, 2130 North. So all three of these are valid addresses. They're all real. And, historically, risk modelers and other insurtechs may have used any of these addresses. And, how much of an impact is that going to have? And this is just one location that has changed 3 different times in just the street name. Again, I've seen it with the city change, or this a condo that has an address in both cities. Like, they're still recognized. And again, if you're trying to blend data, you want to make sure that you're getting accurate data, because the risk profile might look very different if it was incorrectly signed to Cougar versus Bulldog, and using SmartyKey that understands no, these are the same places. So assign the old model to it is very helpful. And I guess that's the other point. We use a rooftop geocoding. So we've got this pizza shop over here. There's, I think, a ski shop here, and then the UPS store here. So we're actually demonstrating not only rooftop geocoding, but suite level accuracy as well. Again, so combining it all, let's bring it all back together here for this last little bit. Verify and standardize the address. Smarty's geocoding will do that for you. Each response you submit, or each address you submit, will return a response with a verified and standardized address. Then we will drop the geocode on the primary structure. Okay, and at that point, insurers can then take the PUID and connect that to their risk models, and that's going to create more profitable programs, reduce loss ratios, help your overall gross premium, and be able to have an accurate forecast for your business's growth. Last thing here showing this, or I guess it's the second to last thing. So we've got property data. Now I want to bring up, we have over 350 property data attributes, but these are just a couple things like assessed value, the block, the definition code, building square feet. We also have rooftop. We have feet facing street. Roof material, I think, is on there as well. And there's a whole bunch more, like the owner of the building is on there. There's many property attributes. Again, I brought up, like, what are the walls made out of, right? Is it masonry, still reinforced masonry? That's in there. But 350, that's one where you can kind of test it through our demo with our free trials. You can test our property data out, see what data points come back, and it's up to 350 attributes.
So we've really been focusing on how this affects like risk modeling, and you alluded to this earlier, but huge value of the property data is that like form prefill. So if
Yes.
you're an insurer and you're thinking about customer experience, There's this instant level of trust that you gain when you know things that they expect you to know, right? So imagine
Yeah.
how much difference how much different say I'm applying for homeowners insurance. What if I can take that from 40 questions to 10 questions? What if I can get the majority of this data that I'm going to ask for from the property record simply based on an address entry? So
Yeah.
there's huge kind of improvements on, I guess, both ends of the chain, I guess.
Yeah, and that's a good point too. So like then you can take that and deliver it back to your insured and be like, no, like this is what we see in a report, and you are generating that trust because you've pre-filled that accurately, and they're like, oh, they understand me, they understand my business. In the long run, that's going to help your NPS as well, your Net Promoter Score, and the trust they have in your company. So being able to show that instead of just making them work through it, it's going to take a lot of effort off their part, and they'll be a lot happier, and it'll be a better experience.
This is a fun little tease for a session we're doing tomorrow. We
Yeah,
have a session specifically about how Smarty enrichment data can help the customer experience and kind of remove friction. So if this is of
yeah.
interest, we'll have some more examples of this. I think it's tomorrow morning. So
Tomorrow morning, it's an early session, maybe.
yeah,
Yeah,
I think it's the 9 a.m. session. So if that's of interest to anybody, we'd love to
yeah.
see you there as well.
Well,
There's
and that'll showcase a little bit too of like how to combine it, if I'm not mistaken, as well, like being able to work it, right? Because we are very much raw, but we also have ideas on how to combine it to make it more valuable to you as an insurer. Um, Risk models. So I guess risk data, hazard data, right? So we can see again, there's 465, but this is an example of the API response for this particular home right here. Being able to see again, I believe hail is in there, volcano, earthquake, storm surge, wildfire. Are there expected annual losses? Just a quick glance over here. You can see this is fairly dry and deserty. Like I don't think we have far on here, but we probably should have scrolled down and pulled some of that. But I mean, that could definitely be a big risk factor for this particular area. And being able to see that. And again, we do return like, you know, what's the expected annual loss of this, and we do it by the hazard type. Again, those of you who have become licensed know that there's those perils that we insure against. That's a lot of what you'll see here.
Well, this is a big opportunity to smooth friction as well. We alluded to this earlier. We see ourselves as ideally solving your problem, but maybe not always solving your problem.
Yeah,
Using this data set, you can very quickly kind of rule people in or rule people out based on very broad sort of benchmarks, right? If I have below X index for fire risk, you want that customer, moved along versus, hey, this is on the margin. Maybe this requires an additional research or some additional modeling. So this is like a very kind of early in the underwriting process, put people in the appropriate buckets, approve
yeah,
people that need approval, and then, identify either people who are rejected based on your, tolerance for different risk types,
yeah.
or, devote more money and more time into perfecting the profile for that property. So it's just a great way to move a lot of people through your system seamlessly at really high volume.
It's a great first pass. It's wonderful for that, getting it done. Um, yeah, again, let's recap kind of what we've got here. Improve risk models, be more accurate, price better, capital reserve planning, automate your underwriting, make it, Ben's talking about frictionless, right? Like this is automation. We're automating underwriting questions, reducing those. How quickly could this impact your quote to bind time, right? Like by being able to automatically pre-fill and populate these questions, it could be a big thing for you. Again, stronger fraud protection. You know what's there when you have the property data. You know who owns the building. Be able to see what the condition may have been. Like again, looking at the different attributes, and have fewer bad data claims, which is big because the ability to mitigate those bad data claims is big. Again, kind of what we went over already. thanks for joining us. Do we have any questions out there?
Nothing came through. We love to hear ourselves talk, and we love to hear each other talk. We're just good buddies. So, yeah, please chime in if there are any questions that have come up as we've been talking. We've sort of been high on our own supply here, but yeah, any specific questions from the audience would be welcome. Ryan asks, are there ways to utilize rooftop geocoding to link to Google Maps to pull back the Google Street View image?
That's a great question. And I think there may be some ways to work within some of that. Our support team is really solid on a lot of that. They sit right next to our developers. I would encourage you guys to give us a call, talk to our real live support, and see what's possible.
Yeah, that's a super cool idea. I know if you go to the Smarty website to the US address verification demo, we're doing something similar where you can compare the geocode that you get from Google versus the geocode you get from Smarty. So I think taking that address geocode and getting the street view would just be another step in that process. So that's a cool idea, I think very doable.
Yeah.
Excellent. All righty. Well, again, thanks for walking us through that, Ryan. Thanks to everybody for being here, and we will see you around on the next couple of sessions. Have a great day. Thanks, guys.
Yeah.